Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about a big tech stock which incredibly with this very high stock market and a lot of companies that are mostly overvalued or anyway not undervalued, this company is actually very undervalued, okay? So it is having issues and there is a lot of hate toward this stock. So can it be an opportunity? Well, let's take a look. Obviously, the stock I'm talking about here is Facebook. Ticker symbol FB. I don't think that we need an introduction for this one because everyone knows it. And we see that the stock now in the before hours is around 257.61. So what is going on over there? What is the fair price and what are the risks? So we are gonna see all of that. And the only thing I ask you guys is please leave me another like. It's very important. Thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Now, the first thing I want to see is the valuation of Facebook, and then at the end of the video we are gonna see what are the issues right now, okay? So the risks to keep in mind. Now, first of all, just quickly, Facebook, obviously you all know that when you buy Facebook stock, actually you are buying what is called the family, okay? So you have the blue Facebook, Instagram, WhatsApp, which considered as a family, they have a monthly active users of around 3.21 billion. This is for the last quarter results, September 2020. Increased 14% year over year. Now, a lot of people kind of forget about it, but Facebook has also Oculus, okay, which is probably one of the best in terms of virtual reality out there, okay. And even though it is still quite small comparing to obviously the revenues coming from ads and stuff, which are more than basically 98% of Facebook as of now, well, it looks like that the world of gaming and stuff is going through the virtual reality, okay? We have seen lots of new games, new stuff, so being positioned in that kind of industry, in my opinion, will turn out to be a great stuff in 10 years from now. And Facebook is very well positioned over there. Now, when we take a look at the revenue of Facebook, obviously we have had a huge growth since 2013. And now the expectations from analysts 2020 and 2021 are respectively 84 billion and 104.5 billion dollars in 2021. Okay, so this is just this year has ended. We just need the official result with the last quarter of Q4, which will be released very soon. And when we take a look at net income, we see that overall they went up together with earnings and then a little bit of drop in 2019. This was due to investments in increasing the security and privacy of the stuff, okay? I don't know if you remember Cambridge Analytica. This was basically a result of it, where Facebook almost doubled the expenses in security equipment, okay, for the data. Then we see that they will continue to go out expected after this has happened together with the revenues. Now, what is very brilliant about Facebook is one of my best businesses over there in terms of efficiency is that you have the net margin, which in the last basically 4-5 years has always been above 25%, okay? Now, from 2016 to actually 2018 has been very near to 40% in net margin, which is absolutely insane. And then we have had, as I told you, the little bit of issue with new investments in 2019. However, it was still above 25%. And then now it is projected to come back up above 30%. So a very incredible business in terms of efficiency. It is not easy to find a business out there that has a better profitability than Facebook. Also, take a look at here, the return on equity in the last 4 years, always been above 20% or very near. A very great business. business in terms of how much money they make. When we take a look at the balance sheet of Facebook, we have that the ratio between current assets and current liabilities, which is the current ratio, is 5.5. Okay, absolutely huge. It is between the 2% of businesses out there that they have this kind of extremely positive current ratio. Then even better, the total assets divided by total liabilities, it's 5.10. Okay, so extremely huge in terms of financial risk, financial distress. Absolutely zero risk at all. The debt to equity ratio 8.19%. However, they have 55.6 billions in cash, and the debt is just 9.6 billion, so they can pay it whenever they want, up to 5 times, and that gives the net debt to equity ratio of 0. Book to value 6. Now for the valuation, I'm not gonna explain everything. If you want to see how I did it, and I also give you a free template, go to check this video out where you will understand step by step how I did it. However, when we take a look at Facebook, we see that the net income margin on average since 2016 has been 32.50%, free cash flow divided by net income 114.48, and the revenue growth on average 41.30%. Now to understand the fair price, obviously the first two revenues estimates are from analysts, the one I told you before. Then from 2022 to 2024 I have estimated a 15% growth rate, so analysts are saying that it's gonna be 16.5. So I have been even more conservative than them, and then 10% until 2027. The requirements, 8.5% discount rate, perpetual growth after 2027, 2.80%. And this scenario gives us a fair price today of $322.43 per share. Now, in the bull case, until 2024, estimated 17% growth rate, and then 11% until 2027. The requirements here are still the same, and the fair price will be $345.15 per share. The bear case, a 12% growth rate until 2024 and then 7%. Same requirements, the fair value will be $281.70 per share. In terms of probabilities, I put a 0.5 at the normal, a bull 0.25 and 0.25 to the bear. And the average fair price is this one, $317.93 per share. In the pre-market was around 256, so that we have that Facebook stock is actually 19.36% undervalued to its fair price. Now, just one thing, the average net income margin was 32.50, and I have taken for this valuation just 25, okay, just 25, which in my opinion is way conservative for Facebook stock. So this estimate, in my opinion, is extremely conservative for Facebook stock. Now, what are the problems with Facebook? First of all, what has happened in Washington, D.C., and that basically social media stocks are now a little bit in trouble. There is a lot of hate against these kind of stocks. Now, the first thing that we want to see is what is the Section 230. I don't know if you know it. Basically, it is the section that it is protecting Facebook against the claims of the government, okay? Because they say that it passed in 1996 and say that an interactive computer service can't be treated as the publisher or speaker of third-party content, okay? So basically, all of that says is that if someone posts something on Facebook or other social media, Facebook is not the responsible for it, okay? It is not the publisher. The fault is directly related to the publisher itself, okay? So the person, actually, the physical person will put those things in. Another big issue for Facebook is that during the recent days, actually, they were planning to change a WhatsApp policy. This is mainly because WhatsApp and Instagram are highly under-monetized, in my opinion. They were trying to find a new way to make more money. Now, I don't know if you remember my previous videos that I did on Facebook this summer. I was telling you that Facebook was moving toward India, okay, which is a huge market for them. And they have responses also from India, from the Indian government. They are criticizing this change in policy. So it is an issue, a very big issue. And right now, they have postponed this change from February to May. Basically, Mark Zuckerberg is saying that the policy has been misinterpreted and with confusion and misinformation. And that things are not as bad as the people say. However, once again, this goes to adds up to the fact that Facebook is right now facing troubles from basically different angles. And the worst of them all is this one, without any doubts, the antitrust probe against Facebook, which has been made in December 2020 by the Federal Trade Commissions and Attorneys General from 46 states, which they basically launched this antitrust proceeding where they are basically arguing that Facebook is using a monopolistic view. And this is because mainly they have acquired Instagram and WhatsApp years ago. And their main claim is that there is not much competition. The lack of competition there makes Facebook actually deciding the prices for advertising. This is a big argument which honestly we don't know exactly how it will end up. Honestly, during the last year especially, we have seen the rise of new competitors for Facebook. Okay, we have seen Pinterest, we have seen coming out TikTok very strongly. Also right now with the WhatsApp issue, we have seen a lot of people switching to Telegram. Okay, so a different this is basically the Russian WhatsApp. So in terms of competition, we are now seeing stuff differently from Facebook. And the main risk here feared by investors is a split of Facebook. A split of the main families, basically. So you have to kind of separate Facebook from Instagram and WhatsApp. I don't know how technically they are planning to do it, if they are gonna do it. And many investors are obviously scared of this thing. To be perfectly honest, I don't know if this thing actually is a very bad thing or can be better than what we think. Because the main risk for Facebook as of now is that their future growth will be actually limited, okay? Because they will not be allowed probably to do more acquisitions, to develop new businesses. While if they split the business, we could have actually something similar to what eBay and PayPal have done. So you will have a very mature blue Facebook business on one side, and then you will have Instagram and WhatsApp, which are, in my opinion, the growth side of the business. Very under-monetized as of now, but they could focus more on those businesses and let them grow, okay? And you, as a Facebook shareholders, you will obviously get both shares of the things, okay? In the case that a split happens. Now, we see that there are a lot of problems, and the market is pricing that right now. As I showed you before, the stock is undervalued, and there is no doubt about it. The thing is, it is your call. When you're buying Facebook, you're buying a business, which in terms of business itself, even by being extremely conservative, it is undervalued, which is very rare to see in the market right now. The question is, are you willing to actually support the next 1 year and a half at least of issues with governments and policies or not? This is a stock which is very similar in kind of different points of view to Chinese stocks, okay? For example, Alibaba. It is what I call a very great business, but which is a trouble stock, okay? Because most of the times you end up with basically regulations and politics and policies, all these kind of things, then they go obviously to impact the business itself. So the main question is this: are you willing to hold the risk of these policies? Policies which can put also hate, as we are seeing right now over Facebook, and make consumers switch through different companies. I will tell you what I do, and then it is your choice. If you follow my channel, you know that I already own Facebook stock. I have been buying Facebook in the summer when it was below $200. I have an average price of 198.7. As of now, I'm holding my shares. However, I am not adding more because the position for me is already enough in order to sustain trouble stocks, okay? Trauma stocks. I don't know how do you want to call them, but those kind of stocks which are most of the times involved with policies issues, okay? I have already a position in both Facebook and Alibaba. For me, it is fine to keep them like that. Facebook, once again, it's a stock that if this kind of stuff ends up in a positive way for Facebook, well, very easily you will see an explosion in the price in just a couple of weeks. It come back to the fair price. So it is your choice. Am I willing to hold the risk of basically this kind of regulations, or do I prefer to go invest in other companies which are out of the radar of regulators? So this is the end of the video, guys. I hope you find it interesting. Leave me a like and leave me a comment. Actually, tell me what are you planning to do with Facebook stock. Subscribe to the channel, and as always, guys, have a wonderful day.